Hey, what's going on, Steve? Hey, just let me know that you can hear me. Let me see, because it looks like we got earnings up. Let's jump into them. Let's see what we got here. Nope. All right. Let's see. Ooh, automotive gross margin came in weak at 27.9. EBITDA, operating expenses came in much lower. Total revenues came in higher than I had expected, so that was good. What else we got? Free cash flow. Well, free cash flow was low, but still in the positive, so that's a good thing. Cash went up, so that was very, very positive, so that's a good thing there. Let's see, revenue grew 42% year over year, 16.9 billion year-over-year revenue, plus growth in vehicle deliveries. Average selling price. I wonder if we can, we'll have to calculate out average selling price because that's much higher on the top line than expected. So the average selling price was definitely higher than I had anticipated. Growth in other parts of the business, that's good. Let's hopefully they expand upon that in the call. Operating income. Operating margin was 14.6. I was hoping for 15, so that came in lower than I was hoping for. I had them at 16.8. Increased average selling price, growth of vehicles, profitable, lower stock-based compensation expense. The cost of everything. So that was huge. Higher fixed unit costs Shanghai due to shutdowns that we knew. Bitcoin impairment, we knew about that. And a quarter cash, short-term marketable. Let me see, As of the end of the quarter, we converted approximately, okay, so they did sell some of their Bitcoin. All right. So, I mean, looks like at the end, we convert 75%. So they converted a lot of that Bitcoin to their balance sheet, which is why they've got 18 billion in cash. That's good. So Bitcoin impairment issues for the future should be gone. So that actually will make a lot of people happy. We may actually see the stock jump on that. Let me see if I can jump on here and see how the stock is moving. Way up. The stock is way up right now, up 3% as of right now. All righty, let's dive into this a little bit deeper. Ooh, they've got supercharger stations on here now. That's good. So 3,900 supercharger stations. Deliveries, deliveries are about the same, up 15 from what they had reported at the beginning of the month. Q2 achieved record production rates across the company. However, we saw continuation challenges. Let me see, US and California and Texas. Fremont made a record number of vehicles in Q2. That's awesome. We kind of anticipated that. Texas, we had a flexibility to produce vehicles, other structural packs and legacy battery packs. Yep, we knew that they brought over the 2170s. Texas continues to grow. Yeah, I sure hope so. Robotaxi and other, they added to the TBD, so that's good. Still no status is just in development for Cybertruck. So hopefully maybe we'll get some information on that. Probably won't even hear anything. This might change in Q3, if not definitely Q4. Shanghai factory shut down fully and then partially, blah, blah, blah. We knew that. Thanks to strong production rate, improvement towards Q2 team. 1,000, yep, we knew about the 1,000, and they're cranking up quickly, so that's good. So hopefully they can dive into more about that on the call. 100,000 FSD drivers. We knew that's what they were striving for. This is one of the great things about, Tesla and Elon. They basically tell us all of this all along the way. So hopefully we just get more details on it, but there's nothing that's hidden. We kind of know most of this stuff. Field software, adjusted comfort, ride height, battery powertrain, 70% hour. Sorry, I should read this out loud. Unless you guys are reading along, I read slow, so I apologize. Energy storage deployments decreased by 11% year over year. Energy is the next one. I think, we've talked about it before. Energy is going to, be going up. Solar deployments over here, we can see, way up, but they increased 25%. So energy, I'm still very positive on energy. I just think it's going to take a few more years before it really gets going. They're just laying the groundwork for it all now. So it's, I would say picture Tesla back in 2015, before they came out with the Model 3. I think that's where they're at. So give it another 3 years and it'll jump like it did with the Model 3. Q2 services and other business-related positive gross margins. Used car business remains strong. Yep, we saw that for sure. Here we go. Outlook. We expect to see 50%. Yep, they stuck with the 50%. They did not change that. I didn't think they would, but I was hoping that maybe they would dive in a little bit further with it. Rate of growth will depend on equipment, capacity, factory, uptime, operational efficiency, basically the same. We had sufficient liquidity. Profitability, we continue to execute innovations, reduce costs, manufacturing operations over time. We expect hardware-related profits to be accompanied and the software. So, they don't even have software stuff in there yet, and they're already crazy profitable with the hardware. And again, that's where vehicles come in, and vehicles, historically, vehicles are not that. I mean, think about hardware. You're buying computers. Anything that's big usually does not have high margins attached to it. It's all in the software and all of the accessories. Tesla already has it with the hardware. They haven't even come out with the software and accessories really in mass scale yet. Pace of production ramps awesome, but will be influenced by successful introduction of many new product and manufacturing technologies in new locations and ongoing supply chain related challenges. Kind of curious as to what the new product and manufacturing technologies are going to be. Factory ramps take time. We knew that. We look back at Shanghai. That took a little while. We are making progress on the industrialization of Cybertruck, which is currently planned for Austin production subsequent to Model Y ramp. Excellent. Okay, so we got a little more clarity there. Nothing massive. So it's basically once they get Model Y up and running to ramp where they want it, then they will start the Cybertruck. So that's kind of goes hand in hand. So that'll be good. So if we know that Cybertruck is going to be, or Model Y is going to be ready, let's say they're up to scale and ramp in the spring, then we can definitely anticipate summer being the time frame that we're going to be getting the Model Y out. I'm sorry, I'm trying to work on something here so I can see the way. I've never done this before with a share screen. So yeah, that's not what I wanted. There we go. Nope. There we go. Okay. Shareholder meeting, that's going to be exciting too. Let's see. Key metrics, operating cash flow. So yeah, I mean, we saw the decline, and I'm sure they're going to point out, look at the declining cash flow. But you got to remember, this was ramping Berlin and Austin in the beginning, really into ramping Berlin and Austin, and Shanghai was down. So this, when you go back to here, is, oh, by the way, Shanghai was just starting to ramp, and look at what happened with Shanghai. So if you look at this shooting up here, that's exactly, see, look at this, up, 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 down for Shanghai, up, up, up. So that's exactly what's going to happen right now. So I guarantee, I'm going to guarantee that we're going to see this go up significantly for Q3 and Q4, very much like we saw this. And then once those two are scaled and up and ramp, Q1 and Q2 of next year are going to be monstrous for cash flow. Operating cash flow. Yeah. Q1, Q2. All right, let's see. What else do we have here? Let's dive in a little deeper. Automotive sales. Yeah. Total revenues. We saw that. So yeah, EPS still comes in. Look at that, 1.95 and 2.18. I mean, that beats my numbers. So they still came in nicely on that. And I apologize, I'm not good enough with their numbers to dive in. Let me see, income and expense, netcom. Because I'll have to take some time and really dive in to see, because where they should have it up top here. And I scrolled right by it right off the bat. Regulatory credits. I called 350 million for regulatory credits, so I was close on that one. Woo! I got something right. So yeah, so 350 million for regulatory credits. That's but that's roughly where I thought it was going to be. Based off of last year's numbers. And hopefully, I mean, obviously it's beneficial because we know that Tesla has said that they're basically using those tax credits to build their new factories. So they're letting their competition pay for their new factories. Let's see. Balance sheet diluted. Going deep. All right. Yeah, I'll have to take some time and really dive into this. Unaudited. Let me go through here. Stock-based compensation. Yep, we knew that was down. So now what this does tell me too, because automotive gross margins did not hit 30%, that means that Elon is not going to get that last tranche, which I thought they would. So not a bad thing. I mean, I'm sure, again, I don't think that's why he's doing this for the business. So let me see. Let me go back up here. No, there it is. Yeah. So automotive gross margins, yeah. So the 27.9. So that means that he's not going to get that last tranche. So that means that, it's going to take, we have to start that clock over again. So if he is going to hit that, it's not going to happen until next year. Let me see and jump back over to here. All right. So let me go through your questions here. Let me see what we got. How's it going, everybody? Yes, sorry, I was going bonkers here. Let me see where their stock is at. Stock's still up about 3%, so that's excellent. So I'm going to dive in a little bit further in a minute. My share screen is very difficult because I don't know fully how to operate that, but I'm learning. So I appreciate you guys sticking around for learning. Yeah. So yeah, Jerry, numbers look pretty good. EPS was great. I'm going to dive into that a little bit further in a minute to figure out what is going on and why EPS came in so good. So we're looking at the automotive revenues. Actually, let me see if I could do it this way. Ooh, yeah. Here we go. Let's see. EPS is good. David, how's it going, my man? Kairov, how's it going there? I sold 70% of their. Yeah, I did see that they sold 75% of their Bitcoin. And they said they sold it like near the end of the quarter. So I'm like, did they sell it at the bottom? I don't know. They said over Q2, so maybe they'll dive into that a little bit more as far as timing goes. But either way, I think the good thing about that is a lot of people were kind of questioning what they were doing. And now that they don't have Bitcoin on their plate anymore, that's one of the overhangs that we had. We still have the Twitter thing going on. But with that overhang gone, that means that people could be like, all right, the people who hated the stock because they had Bitcoin don't have to worry about it. And even if for some reason Bitcoin does completely crash, no big deal because the impairment will be so minuscule in the future, it's not going to matter. Yeah, Jerry, I agree. The next 2 quarters are going to be massive. We're going to have some awesome numbers coming up in the next 2 quarters. Yeah, numbers are looking relatively good. I mean, vehicle gross margins were down lower than I expected, but all in all, the numbers seem to be pretty good. We've got we've got the stock up 3%, so that's looking good. Yeah, I have a feeling, I don't know if they're going to do it at the annual shareholder meeting, but I have a feeling we're going to hear about at least one, if not 2 factories by the end of the year. Yeah, I think you're right. It's definitely high. So if you did the math on it, I appreciate that. Thank you. Way higher than I thought. I thought I was going to be under anyway with 53,500, but that was definitely way higher than I had anticipated. Yeah, Denny, everything's looking good so far. Nothing horribly questionable. The market at this point seems to be, it's coming down a little bit, but it's still up 2.5%. So it looks like the cash flow, because they're still positive on cash flow, looks like they understand that the cash flow is down because they're ramping 2 factories in the Shanghai shutdown. But the fact that they have and added to their cash balance is significant. Yeah, that was mixed on that one. I think at this point, like obviously hindsight's 2020, but if Tesla said, "Hey, you know what? Bitcoin is low. We do see potential in the future for it. We bought some now," wouldn't be as terrible. But obviously, you don't know, especially if you're playing it long term. So clearly, they decided that it's just better to not have it. Or maybe they decided that, it wasn't going to benefit them the way they did. Maybe they'll get into it later. Who knows? Maybe they converted some to Doge. Who knows? Yeah, I'm definitely waiting for the earnings call. I want to get some more information on that. So based on the numbers, stock is up, stock is looking good. So we will see how this goes. So give me 1 minute because, again, I don't know how to do this with my share screen. This is the first time I've tried it on this new system. So if you give me 1 minute, I'm going to play around and then I'll try to dive back into these numbers. Yeah, Kara, if I'm actually going to have the earnings call, I'll do it on here. I'll probably just hang around on here. I don't know if I'm going to close this out and start a new one or if I'll just keep this going. I may just keep this one rolling as it is and keep you guys on here, but feel free because we have an hour before the earnings call, so that'll give me time to try and get the share screen working. All right, let me see what we got here. All right, so we'll slowly go through this. Yeah, I still can't figure this out. See, I need dual screens on this, and I'm trying to work with it. It is not easy. Oh yes, I'm definitely going to be doing the earnings call. Thanks, Norbert. So just so you guys know, for me, I'm 42 and I'm right in that middle kind of place where like I know technology, but I don't know some of the newer technology and like live streaming, totally out of my realm. I didn't own a computer for 7 years. And I just bought one last November for the first time just for this channel. So it's been a long time, and the only computer use that I had was basically whatever I needed at work. So I'm trying to learn this now with you guys. So I appreciate your patience, and I will get this up and running. But yeah, so overall, I mean, we can chat about it. And if you guys want to scroll through the numbers, I'm going to dive back into it again once I get this up and running, figured out if I actually can. But yeah, so overall numbers seem good. Let me see. Yeah, stock is still up 2.5%. What do we have for options? Yeah, my parents are their late 60s, early 70s, and they definitely took some time to get a smartphone. So I'm proud of them. They actually went out, they did it. It took them a while to understand, what they were getting into, what they were doing, and how to use it. And I gotta say, I'm proud of them for going out there and making it happen. So I'm very proud of them for that. I think I get it from them, where it's like, yes, it's challenging. It's going to take me some time to get it, but I will work on figuring it out. Awesome. Yeah, let me know when what you come up with, because I don't have time to do my spreadsheet now. I'll have to do that probably this weekend. Let's see here. I think the earnings call is going to determine how much higher we go. I think if they dive further into these numbers and give us, more details about what they are looking at when it comes to Q3 and Q4 for production, because they said in the report, they're still expecting 50% year over year growth, but obviously it depends on, as long as Shanghai doesn't lock down again, those are things that are out of their control, supply chain issues as well. So they're still anticipating 50% year over year growth. But if they can dive into details about exactly what they're looking for, that might help. That might push the stock higher. And again, I don't know how much because we've got the shareholder meeting in 2 weeks, I don't know how much they're going to divulge with information now. I'm almost wondering if the majority of this stock bump after hours is due to the Bitcoin sale. I have no doubt that's probably a big piece of it. Yeah, I saw the energy, and I wasn't anticipating a lot out of energy. We knew that it's still in a very early growth stage for them when it comes to the energy. So I'm totally happy with the little bit that they're going on right now. Yeah, I want it back to 1200 too. I think we'll get there. We'll get there before we know it, and we'll be looking back at this moment, being extremely excited about the fact that, oh my gosh, look at where we were just probably a year from now. I'm going to say probably a year from now. Let's say Q2 earnings of 2023. We'll be back at 1200, maybe sooner. I don't know. This market has been quite wild. Let's see here. Where did I go? All right. Ooh, I wonder if I could do it this way. Oh yeah. Is that working for you guys now? I think I got it. I think I figured it out. It's going to be moving wildly at this point. Right now, we see the numbers. So it's dropping. I don't know. Maybe it's taking some people time to go through the report. I did hear rumors that there's a lot of short covering going on the last couple of days. So things are going to be completely wild. I wouldn't be too concerned about it. The initial reaction was good. And again, this is something we talk about all the time is, pay attention to the fundamentals. And the fundamentals literally just came out in front of our face right now. So in looking at the fundamentals, understanding where we're at, so yes, we anticipated most of this. Some numbers are lower than expected. Some are higher than expected. EPS numbers are good. Gross margin was down a little bit, not a huge concern. Free cash flow was still positive, so they didn't lose money. They still gained money. Sold the Bitcoin. That's a good positive. Huge. They actually added to their cash balance. Very good. So these are the fundamentals that I really want to pay attention to. And then again, I know it's boring to talk about, but that's what this year has been all about, is production. How much production can we get out? We are so demand pushed right now, and the production constraint is what we need to alleviate. So if we can get as much production out as possible, and thank you. If you guys, forever who was on here, Kairov, he's over on Twitter at a Tesla bot. There's Troy Teslalik, who is awesome. A Tesla bot, also awesome. Recommend following them both for looking at production numbers, and that's really what's going to help us see in the future where we're going. Because right now, the strongest fundamental information we can get is production. Is production coming out? Are we catching up with demand? Because as soon as we get to a point where production is keeping up with demand, that means that we can really grow even more. we can push the stock higher because, hey, now we can say we can bring prices down. And don't forget, Tesla is the only company out there right now that has this much wiggle room. Sure, gross vehicle margins were down to 27%. Most other companies are like 8%. So when you have that much wiggle room, if you come down on prices, if Tesla came down 10% on their prices, it would put so much pressure on all of the competition that they would end up selling vehicles for even lower than below cost than they're already doing it. Tesla is one of the very few that are actually selling profitable vehicles right now. So that's very important. That's huge fundamental information to have, that Tesla has the pricing power over most everyone else. Let's see. Yes. This is the gentleman right here. He's the one to follow. Yes, Norbert, by 2030. I'm shooting for 2025, but I am way behind the eight ball. I have a lot of ground to make up if I want to make that happen. All right, so let me see. Dive back into this a little bit here. Oh, what is happening? That's not cool. All right. So I'll slow it down and I'm going to start taking a look a little deeper onto some of these. Yeah, Jerry, this is going to be big. And actually, I don't know. Do you guys think that Elon's going to be on? I think he'll be on the call this time. He was on the Q1 call. So I have a feeling he'll be on the call again. And again, if they really dive into numbers, then we can definitely see we can see some good movement in the stock. All right, quarterly deliveries. Yep, we knew deliveries were down, but that's fine. And I'm looking back at stuff. Actually, let me move myself out of the way here. How do I do that? There we go. Much better. Yeah, so like looking at the Q1 deliveries, just going back to when Shanghai was ramping, like the graphs look very similar. And so if you're following the graphs, then if you follow the graphs based off of the Shanghai ramp, you got to remember now we have two factories ramping and they're working on the 4680 batteries. So it may take a little bit longer for that ramp to get up to where Shanghai was, but it will be magnified with the graph, and that's where the exponential growth comes in. That's what a lot of people are missing is, yes, obviously we had a lot of headwinds this quarter, but just looking at how it grows, and once you do get that ball rolling, it's just like a snowball. You get that snowball built. Once you get to a point, it doesn't take much to pick up more snow and make that snowball exponentially bigger. And that's literally what's happening. Growing. All right. So let me see. We're diving back in here. So revenues. So automotive sales obviously were down overall because we didn't have as many deliveries, but the credits, leasing, total revenues. I mean, and then if you're looking at year over year, I mean, revenues are way up. Let me see. All right, estimates 14, 17. I'll take a look and see what mine is going to be updated to at the end of the year. And Rob over at Tesla Daily was breaking it down too, because I do two different ways at looking at like PE ratios. I'll either do a trailing 4 quarters, so you do a trailing 12 months, the last 4 quarters, you add them together and you do that, or you can do a forward looking, based off of this quarter. But because this quarter is a one-off quarter, you really don't want to use this to guide what the future is going to look like, just because we had so many headwinds. So as Rob had said, right now, the most realistic way to really look at it is take Q1 and Q2, add those together, double it, and then you can get your PE ratio based off of that. And I think that is probably a good idea to look at. And he was saying, based off of those numbers, it was looking at like an 84 PE based off of his numbers. So coming into the 195, actually, Kairav, if you can, do you want to do the math on that and let us know what we come up with? Just because I'm curious as to what the PE ratio would be based off of these numbers if we took EPS right now, EPS of Q1, and then did that out. That'd be awesome. Yeah, it's going to be a roller coaster. So we're at least based on what I'm seeing right now, we're still technically in the green, barely in the green. So again, it's such a volatile stock still. We're going to look a year, 2 years from now, and we're going to realize that over the next 2 years, we're going to have this stock split coming up. We are going to be having, maybe another stock split. I don't know, really depends on how the macro environment does, but we'll have this stock split. We're going to have an upgrade to investor grade rating for credit. And when that happens, there's a lot of institutions that are going to come in. Because right now, Tesla, for the size of the company, has more retail investors than most other large companies of this size. So that usually in turn means a lot more volatility. That's why it has a beta of 2.0. So once we get to a point where there's a lot more institutions in there, think about how many 401k plans are out there that are going to be investing in Tesla just because, they're now in the plan and they've got investor grade rating. When you have a lot of 401k plans and other institutions investing in Tesla, the volatility is going to come down significantly. So the roller coaster ride will end up going away. So, we can say Elon created it, but you got to think about it. Elon's not the one buying and selling. Okay, so sometimes he's the one buying and selling. But for the most part, the roller coaster ride is created by the investors. So you can say that Elon, him saying and doing things may cause that, but it's the investors who are buying and selling off of what he is saying and doing that are actually causing it. Let's see. So there we go. Awesome. Thank you for hooking us up with that. Yeah. So with a price of 740, we're looking at a PE of 76. So again, this is something I talked about before. If we are in a heavy PE compression environment right now, which we clearly are in, Tesla being a profitable company can kind of push past that a little bit. But we saw, they had pulled down at, I think the lowest point where they hit maybe at 620, they were probably around like the mid 50s with the PE ratio. So 76 is still pretty solid and relatively low compared to where Tesla was in the future or in the past. So where we're looking at in the future, 76, I don't know if the market is going to compress more. I think this earnings season is going to let us know if we intend to compress more. I truly don't know, because there's some companies out there who are really compressed. So even if we do, you've got to remember that it's not always going to be a strong PE compression environment. So once we do end up coming out of this environment, that thing can pop back up again. And if that takes a year and we keep on getting growing numbers, because don't forget, these numbers are actually down. So if these numbers are down and we are expecting higher numbers in Q3 and Q4, that PE compression, is going to come down even more. So we'll probably have maybe a 60 or a 50 if the stock price stays the same come by the end of the year. I highly doubt that's going to happen. But if we end up coming down that low, when you start getting into better earnings and we get exponential growth on top of it, it's going to be absolutely bonkers to get to a place where, every time we get new earnings coming out, the stock can take off again. And when the PE compression's gone, that can really lift and the stock price can take off. And that's where we can see that euphoric run again, like we have always seen in the past. All right. What else we have here? Yeah, and then the stock compensation, I know that I had seen a few times over the quarter checking Form 4 filings, wasn't a lot, but there were a few of the higher executives who were exercising options. So I'm sure that's what this plays into. And again, with this not hitting 30%, that means Elon doesn't hit his last tranche. So I don't know, he's not going to have anything. I don't think he has any options left to exercise. Let me know if I'm wrong on that one, but I don't think he does. And so if he doesn't have any options left, that's no problem. And I already talked about it before. I'm pretty sure the shares he sold to buy Twitter, he sold at a loss. So even if he did have to sell any shares later this year, which I know some people are talking about when it comes to buying Twitter, but if he had, if he does have to exercise any options and pay taxes, he can offset that with the losses he already took on the shares he sold. So he's not going to have to sell any extra shares in order to make up for those taxes to pay. Let's see here. Yeah, I'm trying to see if, and I can't remember off the top of my head. I'll have to take a look and see if there's I'll go into it later and I'll start comparing Q1 over Q2 numbers to see if they added anything new to it. It looks like basically the same format because occasionally they'll add new things into it. All right, so automotive gross margins excluding regulatory credits is 26.2%. I mean, that's still solid. And so that's, I don't know if you guys can see it. Yeah, right over here. Yeah, 26.2. I mean, so that's still really good to see those numbers there. Come on, buddy. Oh, that's not what we wanted. Oh boy. Oh boy. Oh, sorry about that. Oh boy. That was terrible. Let's try this again. All right, let's see here. Net cash flow. Let's see. Well, let's dive in a little bit further here. Interest expense, depreciation. Yeah, so a non-GAAP of 2.27. I mean, that's very happy. And like I said, I wanted to see us come in over 2, so that's awesome. I mean, I had us really low. I had us at 173. So I was anticipating us being down, but that's probably why we pushed up, and stock's still up about 1%, so that's not terrible. All right, so I mean, all in all, I'm pretty darn happy with the numbers. We'll wait for the earnings call. We get about 40 minutes before that comes on, so we'll just kind of hang out and chat until that comes on and see what happens. But yeah, that not as awesome as I was hoping for, but still, I think pretty solid numbers. The stock is kind of hanging about flat at this point right now. Oh, did it really? The bit. Let me see here. All right, so Bitcoin. Really? Let me check that. That's actually interesting. I wasn't even anticipating Bitcoin dropping on that. Now, Bitcoin, I don't know if you guys follow, if you guys are in crypto at all. I don't have much. I think I have like 5 or 7% of my portfolio in crypto. But Bitcoin has been coming up, and crypto has been a leading indicator along the way because you can trade it 24 hours a day. You can trade it over the weekend, so you can see this stuff. And so when it's trading over the weekend, you can see it going up, and almost regularly. There's been a few weekends where it hasn't been, but like I'll see it creeping up on a Saturday. I see it creeping up more on a Sunday. And if it's still creeping up on a Sunday, that usually is a leading indicator as to what we are going to be seeing on Monday morning. And sure enough, that has been true and holding true for it. Yeah, Logan, it'll be interesting to see how we trade tomorrow. Obviously, the earnings call, hearing whatever they're going to tell us on the earnings call is going to be pretty important. So I think when we get down to the earnings call, that's going to give us a lot more information and give us an idea as to how we're going to trade tomorrow. Because if they tell us what we want to hear, then that's good. And again, it's so tough because yes, the market wants to hear certain things, and we always talk about what does the market want to hear, and it's the stock moves up and down because of the market, but then we remember that the majority of the stock is owned by retail. So is the market institutions for Tesla, or is the market retail for Tesla? So that's why having these communities and having all you guys, and thank you. This is an awesome live stream. Thank you guys for being here. And so with that, how much is it going to fluctuate because of us as retail? And so those of us who are in the community, and we do diversify a lot, if for those of you guys who are over on Twitter, full well that there's a lot of Tesla bulls over on Twitter who even have differing opinions on a lot of different things. That is true, Mario. They hardly talk about it. And that's why a lot of times in the past, it's like when Elon's not on the call, sometimes it goes better because, Zach is talking more about what the market wants to hear when it comes to the stock price. Whereas when Elon talks, a lot of time Elon talks about the future. And so for those of us who are Tesla investors, long-term investors, and we want to know, all right, where are we going in the future? What are we looking at for 5 and 10 years down the road? That's the information Elon gives us. But there's a lot of other investors out there who are like, all right, well, tell me about tomorrow. What is Tesla going to give me tomorrow? And Elon doesn't really talk about that. And so that's what Zach talks about. So when you have more Zach, then the market and the stock price are going to move now because that's what they want to hear about now. I'm more concerned about what are we going to be seeing in the future. And so when you're looking at the future, all right, well, what are we going to be seeing in the future for the stock price? That is where Elon comes in. And I've talked about it before, where you're going on an upward trend here, and you're going to end up swinging up and down on that upward trend. And the upward trend is what Elon talks about. The ups and downs are what the market wants. And that's just really what it comes down to. That is so sadly true. And honestly, I don't want to dive too much into politics here, but truly when it comes down to it, politicians having the access to be able to trade in the market while being in office is just unfair, truly unfair. But if they all had to be as transparent with their trades as everybody else, I think that we would be in a better shape. I don't know. I personally just think that they shouldn't be allowed to. Them, the Fed, anybody who has any decision-making abilities that could move the stock market one way or another, they should not be allowed to invest. Yes, Jerry, very much so. That's so many good things on the horizon. And again, these are all the things that Elon talks about. And right now, none of those things are truly reality right now. FSD and insurance are the closest to being reality right now, but that's it. And so for those of us who believe that Tesla is going to get there, that's why we love hearing Elon. The market doesn't give a crap about anything unless it's actually real and happening. And so when the market hears Elon talk, they're like, well, that's great. That's the future. That's not real. And we want to hear real. You got that right, Mario. Does not think about the here and now. Elon talks about 5 to 10 years down the road, which again, if you're an investor for 5 to 10 years, that's why you want to hear him. My Q4 EPS estimate, let me see here. I have I may have to, let me see. I got to update my numbers here. Hold on one second. That's done. That's good. I'm going to go with 45. Oops, whoopsie. All right, my Q4 EPS I've got coming in. Without really dialing into the numbers, I've got them coming in at 411. Where do you have them at? Yes, agreed, Logan. That should be all public information and instant public information. Instantly transparent, no questions asked. Like, hey, just like ARK. It should be very much like ARK, where Nancy Pelosi bought these shares today. That's it. That's what we should know. And it's so funny because this is, again, goes back to the discussion about over on Twitter, when we've got, differing opinions, bulls, and some bulls are for it and some bulls are against it. It's like some people love the fact that he's buying Twitter, and other people are like, well, screw that. I want nothing to do with it. He's crashing the stock. I'm kind of in the middle. I'm just riding the wave as it is. But yeah, it definitely goes both directions. All right, you've got it at 5. And again, I'll update my numbers this weekend. I'll let you know if that changes at all. Because I just bumped up my deliveries to my forecast of 485,000, and then I threw in $55,000 for average selling price, which honestly should be higher, because if we're at 56,000 right now, we've got to remember that the vehicles that are going to be sold during Q4 are going to be based on prices that were bumped up, I think, probably by like springtime. So that will be significantly higher. So average selling price in Q4 might be like 58, might be actually pushing $60,000. So I could be significantly low on mine. Before the split, the only way I would see Tesla going to 4 digits before the split is if we get through Q2 earnings without too much damage in the macro environment, and we get a CPI reading in August of 7 of some sort. Anything below 8%, I don't even know what expectations are at this point. I don't even know if they're out. But if we get something around a 7%, a significant drop in inflation with CPI data, and we get the OPEC meeting on August 3rd talking about releasing more oil to drop oil prices, which would then in turn drop inflation down further for September. If those things happen, we could potentially see it before the split, the run into the split, because that would take a huge weight off of the macro environment, at least in the near term. That is the only way I think we'll see it. I mean, I would love to. I would love to see us hit 4 digits before we get there, but realistically, I think we would need those things to happen. Yeah, that makes sense. Based off of the numbers we just got now, that would definitely make sense. Let me see here. All right. Just trying to get my share screen set up for the for their earnings call. Let's see here. Go back over. Yeah. Oh, and that's another good point too. If for some reason in the next month the Russia-Ukraine situation ends, then we can see a massive skyrocket in the entire stock market, which would then almost guarantee Tesla pushing over 1,000. So that I think would be the reality there. So that's a big one too. Can I even do this? There we go. Nice. This is great. You guys are on here. I'm like learning this whole thing. This is pretty cool. Thank you all. Thank you all for being here and having patience with me learning this. All right. Yep. 28 minutes to the call. All right. See you back on in about half an hour. Yeah. 30 minutes to the call, Mario. Yeah. Tom, you're right about that. Right now, like I'm a history major, and looking back at, pretty much every single war that's ever been waged in the entire history of the world is usually, somebody's ego getting too big, wanting something else. And yeah, it's I don't know. I mean, granted, wars have also gotten us to where we're at now. So I don't know. I'm not a fan, but they happen. I can't stop them, so we just have to deal with it. But you're right; it doesn't look like it's going to end anytime soon. Awesome, thank you, sir. I appreciate that. Yeah, and then seeing as I've now figured this out, I'm going to start doing better at this on my Friday calls, and then hopefully by the time we get to the annual shareholder meeting, I'll be a little bit more efficient at this. You're right, Logan, and it's sad, and it's sad to think that you know and I think that's part of why we got into so many more wars over the last 80 years is we saw World War II, we had the Great Depression, and what saved us from that was basically the war. So World War II basically saved us from the Great Depression, and so I think we started to have some people looking at that and saying, all right, well, how can we manipulate things? Because this war was clearly extremely profitable. So if we were so profitable with this war, how can we manipulate the world to be able to get these profits coming back again? And every time we have needed some money, or some greedy person in some economy country somewhere was like, oh, we want some money. They created a war. They made a war and gave us any reason to be able to move money. We can get into conspiracy theories about this all day long about what it actually came down to, but I don't know. I have very rarely seen a war that went on that actually had to be fought. No, no. Oh, hey Ryan, what's going on, man? No, it doesn't say what he bought, what they sold it for. They just said at the end of Q2. So I don't know what price. I mean, obviously we know it crashed hard during Q2, so they definitely sold it for a loss. That's not a question. But they still added that cash to their balance sheet. But they did say on there, actually, let me take a quick look here. Mm. Mm-mm. Where did it say it? There we go. Cash. So actually, you know what? They didn't sell it for too much of a loss. So if they sold off, well, actually, you know what? sounds like they actually made a profit on it, because if they bought $1 billion worth of Bitcoin, sold off 75%, and actually were able to put that and to convert that 936 million into cash, that's actually a gain. So I don't know how they pulled that off, because I thought they bought it for like 36,000. And we definitely didn't see those numbers anytime during Q2. So that's actually, I don't know. That's a great question. I'm wondering if they're going to discuss that on the earnings call, or somebody may ask afterwards, because that's, yeah, that seems like they definitely made a profit on it, because they basically put almost all of their money that they invested into Bitcoin right back to their cash. So that's a great sign. So people who thought that they were buying into Bitcoin and were going to be losing money, clearly they didn't. They took the impairment, but impairment is actually, personally, I think impairment is a garbage stat that they have to report, because it's sort of like, when they want billionaires to pay a wealth tax. And I'm like, well, that's not realized gains. Like, imagine if all of us had to pay a tax based upon our own wealth. Like, that's just a government trying to get more money from us. So, I mean, yeah, sure, they have billions, and, they have way more than we do, and they don't need that much money. But either way, they don't actually have that. Just like we talk about here all the time, you don't gain or lose anything until you sell your stock. So right now, it looks like they sold their Bitcoin for almost the same amount that they bought it for. And so they're almost back to square one and even, but still have some of their Bitcoin. Now, I know that I think that they said that they sold some before, but it wasn't a lot. So at this point, I'm actually curious as to how much they have left. So let me see. We converted approximately 75% Bitcoin purchases. So they probably have 25% left, but I don't know if it's 25% of the 1 billion that they bought or what. But yeah, well, hopefully maybe they'll talk about that. I don't know if that was one of the questions. I was looking at the question before. I don't know if that was one of the ones that was on there. How many shares are going to have? Way too many. I don't know. Pretty much everyone on here is going to tell you that there's no such thing as way too many. Personally, I have 10 in my main portfolio, and I have 6 in my IRA. My goal is I'm trying to get to 12 before the split. I want to get to 100 by the end of the year post split. So that's my goal. That's why I said I've got a long way to go if I want to retire on Tesla by 2025. But at this point right now, I can devote a lot more capital to investing in Tesla, and especially after I buy my house, I'll have even more. Let's see. Ooh, interesting. That's good information right there. Yeah. So if they sold it at 30,000, again, that's weird, because I think that would still be a loss, because I thought they bought it for 36,000. But hey, if they had to stop in at 30K and it ended up selling off, I mean, good for them. Yeah, I got you, man. I don't know if I grew any back. I'm growing it here now. This is a lot more fun to grow. Yes, Mario. If you have any shares that you're willing to give away because you think you have too many, we have some takers here. Okay, yeah, Larry, that makes sense. That's what I thought. I mean, based off of just rough numbers that I'm looking at, seems like they maybe gained, but either way, I think that's probably one of the good signs that we got out of this, where it seems like sorry, my dad was texting me this info. I don't even know if he's on here. Let me see here. Where's the stock at? Yeah, stock is still back down to flat, basically where we closed the day. Oh yes, I'm angry and need some more. Yeah, I would love to have some more too. Lack of, yes. I definitely have that lack of tech understanding, but I'm working on it. Oh, okay. They bought a 32. I thought it was 36. So that's great information. Thank you for sharing all that. Yeah, smart Elon, and obviously he's human. He's obviously very brilliant doing a lot of different things. He makes mistakes. Maybe this is one of them. Maybe they were just trying something, it didn't work out, whatever. But he always seems to have a backup plan. We know that, as we were talking before, Elon looks and thinks 5 to 10 years down the road. So if he's thinking 10 years down the road, that's like, all right, he's thinking about every step along the way and how could this little thing affect things. It's 4D chess that he's playing. He's playing a game, I call it life chess, where he's constantly looking at, what are the different things that I'm going to see? This is where I want to be in the future. Here are all the different challenges I see across the way. How can I accomplish tackling all those along the way? And that's it. Okay, yeah, James, that's what I thought. I thought they had sold some previously. I thought I remembered last year they sold some. Yes, saving money, very very important. Um, and it's all about investing. For me, it's investing. Investing wisely is the most important thing, and investing in things that are going to generate cash flow are what my focus is. And yes, I want Tesla long term, but I'm anticipating by the end of the decade, Tesla will be doing dividends. And so if I can continue to accumulate as many shares as possible by the end of the decade, then I can start reaping the benefits of the dividends. And then, going back to retiring by 2030, if you're retired by 2030 and then you can live off the dividends from your Tesla stock, that's outstanding. All right, let me see. They originally sold 10% free bought it. Okay, so yeah, so realistically, they've already currently, so if they sold it and made 934 million now, 170 million before, they've made 10% on it. So they've made 10% on their Bitcoin purchase and still own 25% of what they had left. So they're definitely up. So even if Bitcoin completely crashes and goes to zero, they are still profitable on their Bitcoin investment. All right. So they made a quick $100 million over the last year on Bitcoin. Awesome. Way to go, Tesla. You know what? I didn't even take a look at Troy's numbers because there were so many numbers that I had seen. So I didn't have them all written down, but I do have everybody here's written down. Let's see. 199. So Hedgie, I don't know if Hedgie's on here right now, had a 199 EPS estimate goal. Spot on. But then again, that if that was GAAP, then I don't know if that was non-GAAP or GAAP. Mark Morris had 2.50 for non-GAAP, so that was pretty close. Yeah, 12K share price sure would be nice also. And then of course, then there's the options. A lot of people, like I know Vinny from Investment Club, he plays options too, and you can just live it off the premiums. The premiums you can get from the options are fantastic. Especially when it comes to Tesla, like I would just selling puts. You sell some puts, you get the premiums, and then you could buy the stock for cheaper. You kind of win on both ends. It's kind of awesome. Yeah, Tom, that's another good one too, is buybacks. And we'll probably see buybacks before we see dividends, but the buybacks I think are going to be huge. Just because you got to think once we get to a point where, they've got tons of cash flow coming in and they're looking to, convert the stock here and there, they do a buyback and that's going to bring the stock price back up again. And that's a game that Apple plays very well. And they've been doing it over the last decade, which is another reason why they grow so well, is because the stock will run up, they'll split the stock, and then the stock price is lower, and then they do a stock buyback, which then brings the stock higher, and then they'll do, a split again, and they just keep on repeating that cycle. And, they finally hit a point where, their growth was slowing down. They're still a great growth company, but slowing down. It's nowhere near Tesla's, but Tesla could definitely get into that pattern in the future if that's a route they want to go. Obviously they're looking for such mass scale with everything, especially where they've got Optimus coming up at the end of the decade. Most likely, they still have a lot of things they'll probably want to invest in. So I don't know how much cash flow. There's a lot of things can happen, but there's a lot of positives that could happen over the next decade. All right. And let me see. So I don't know when I do this, I'm going to try to make sure I can get the volume on here because what I'll end up doing is I'll mute myself because I'm not going to talk during the conference call at all. We can just chat in the chat box and discuss everything there. Let me see. $21.60. It's like the batteries need 10 more shares. The 2170 batteries, and then you can work your way up to the 4680s. Yeah, see, there you go. The put options and gain the premium. That's brilliant, and that's an awesome way of playing it right there. There you go. Yes, as I just read down. Great minds think alike, David. Yeah, see, and now I'm torn because I would have thought the same thing because of the $500,000 loss in Bitcoin from the impairment. But now that they sold it and because so many people didn't want them to buy it in the first place, I don't know. Maybe we go green because they actually sold it and made a profit. Let me see here. Oops. All right. I'm going to work on trying to get this and make sure that we can get audio because I don't want to miss that. And actually, I don't even know if there is audio right now. I'm going to try it this way. When in doubt, phone it out. Let's see. There we go. Let's get in here. All right, doesn't seem to be any audio yet. So hopefully when this comes on, I want to make sure we've got audio. So if for some reason we don't, I will try to fix it as quickly as possible. Yes, nice 4-digit number. That would be awesome. Yeah, we had that initial excitement when the numbers first came out, which is a good thing. But then it seemed to level off, and I don't know why it leveled off. There may be other people talking about it on the news, which I don't have up right now. But let me see. What in the hell is going on? Why won't this? What the heck, man? No, do this. Oh, the joys of live streams. Thanks, Tim, which is hilarious because that wasn't even up. I don't know what the heck just happened. I'm just trying to get audio to play, and it's not working. Oh, if I do it that way, there we go. That's better. Okay, now we're good. Thank you. I appreciate that. All righty. So we got 9 minutes. Good time is coming. Not triathlons. I do Spartan races. Spartans, and well, actually, I've technically retired from the Spartans. I'll probably end up getting back to them next year. I know Ryan, who was on here. He and I trained together. So yes, I will probably end up getting back into it, but I needed some time to let my body recover. I beat it up for a solid 10 years from doing obstacle course racing between Spartans and Tough Mudders. So it was time to just kind of chill out. Let's see here. Yeah, so I was trying to get out of work earlier, and as I like got back from lunch, and I had like 20 minutes. I had a couple of things I had to button up, and I come back from lunch, and one of my guys tells me that a customer stole something. So I had to go and check out all the stuff, and it was such a pain in the butt. Yeah, no kidding. In the past, like the last couple of times, I would just watch like Rob over at Tesla Daily. He does a great one because he's basically just watching the call with him, but then he does a recap at the end, so it's nice. So I appreciate you guys choosing to come here. This is awesome. Chris, ironically, this channel started as a fitness channel. And I just this past weekend went back and I took all of my old videos and I just put them to unlisted. I didn't want to get rid of them, so I put them back to unlisted. But anybody who had been on here, if you went back into my archives, like from 5, 6, 7 years ago, you would have seen all of my fitness videos. I even had a show called Topless Cooking with Tim. It was quite a riot. Sold at 12. Nice. You timed that one well. Well done. Okay. Yep, that is absolutely true, and that is why actually when I started this channel back up again back last summer, I was doing an all-around investment type channel, and that's what it was. It was investing in health, investing in wealth, investing in family and friends, and it was growing slowly, not much. And I just kind of got into more of the investing thing because I was learning more. And then I had a Tesla video that just blew up and it went viral. I mean, for me, it was 40,000 views, which is insane. I haven't had anything come even close to that since. And so from there, I just kind of took off, and I was really into Tesla. I was starting to learn more about it, and then because that video took off, I was like, oh, let me dive more into this and see what it's all about. And I mean, you guys as a community are huge. The company, the more I learned, the more I wanted to be invested. So I went from having like, I think 2 shares when I started the channel, and I just kept putting more and more money into it because I realized, what the future potential is of this company and what it could bring for me and future generational wealth for my son. So I just kind of took off with that. And so that's why I do the videos on the weekends of me out hiking, because that's me also investing in my health, getting out there for mental health, for physical health, to get out there for all that. Because again, I've talked about it when I was doing my health and fitness channel. It was like, why do I want to be 65 years old at, my kid or grandkid's wedding and be sitting in a chair and not be able to get up and dance? I'm not a dancer anyway, but if I am spry at 65 and 70 years old, I guarantee you my butt's going to be on that dance floor doing something, that's kind of where I was at with that. And I was like, I need to make sure I stay in shape. That's also the reason why I took 2 years off after racing, because I was so beat up. I was no longer taking care of my health because I was beating it up too hard. Yes, definitely. Oh, very nice. Yeah, my son, he's working on losing some weight. I mean, he plays soccer all the time, so for him it's not the working out piece. For him, it's more of the just the nutrition. You know, he just needs to stop drinking lemonade and sugary stuff. So if he can cut down on that, he'll be in much better shape. And because his mom and I are divorced, you know, he's not with me. He's with her most of the time, and she's good. She's normally fine, but he just, you know, he's a kid. He's drinking sugary things, so I got to work on that. Bitcoin, crypto is 7%, so Bitcoin makes up the majority of it. So I'd say Bitcoin's probably like 5% of my portfolio. Thanks, Max. That's about it. It was funny because at my brother's wedding, they had uh, what do they call it? Those were a flash mob. So they had one of those, and they wanted us to dance as the wedding party. And I'm like, dude, I was like, I don't do that. But you know, they picked an easy one, so we went out there. We did the flash mob. It was fine. We had a good time. Yeah, you know, and that's like I think what Elon's doing with Twitter is a good thing. So we'll see what happens and how that plays out. We'll know more in October when that all comes down to it. Let me see here. All right, we got 2.5 minutes. I haven't heard. Oh yeah, CNBC. That you know, and if CNBC is hating on Tesla, that could be a strong reason why the stock pulled back to where it's at right now. Because unfortunately, people pay attention to that garbage. All right, so 2 minutes. Hopefully, in 2 minutes we'll have volume. If not, I promise I will work on it as quickly as possible to make sure we can all hear this. Worst case scenario is I'll just play it through my phone and right into my microphone. So, and thank you all for all of your support. Those of you who have done, you know, super thanks and just watching the channel. The money I do make from YouTube, I'm putting into the studio. Oh, here we go. Let's see. Oh, let me see if I could do it this way. Can you guys hear that? I don't know how loud it is for you guys on your end if you can hear it. Awesome. Cool. Thanks, guys. Yeah, and once they do start, I'll mute myself so that. And actually, let me test it now. Make sure if I mute myself, it doesn't mute the whole entire thing.
afternoon, everyone, and welcome to Tesla's second quarter 2022 Q&A webcast. My name is Martin Viecha, VP of Investor Relations, and I'm joined today by Elon Musk, Zachary Kirkhorn, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. But before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you, Martin. So just as a Q2 recap, Q2 was a unique quarter for Tesla due to a prolonged shutdown of our Shanghai factory. But in spite of all these challenges, it was one of the strongest quarters in our history. Most importantly, in June, we achieved production records in both Fremont and Shanghai. And as a result, we have the potential for a record-breaking second half of the year. I do want to emphasize this is obviously subject to force majeure, things outside of our control. The past few years have been quite a few force majeures. And it's been kind of supply chain hell for several years. Credit to our Boston Tesla supply chain team for overcoming insanely difficult challenges. Huge thanks to the Tesla Shanghai factory team who sacrificed a lot to get the factory back up and running in June and achieve a record output. So also making good progress with production ramp with Berlin. We achieved an important milestone of 1,000 cars a week in June, and we're expecting our Giga Texas to exceed the 1,000 vehicle per week milestone in hopefully in the next few months. To be clear, we're currently making the cars with the 2170 cells, and Drew Becklino will address some of the 4680 questions later in this call. But it is worth emphasizing that we have enough 2170 cells to satisfy all vehicle production for the remainder of the year. So we're not dependent on 4680. 4680 will be important next year, but it is not important this year. That said, we have installed the second generation of manufacturing equipment for 4680 cells in Texas. And even at our established factories like Fremont and Shanghai, we continue to expand capacity. Regarding Autopilot, we've now deployed Fsd Beta with city streets driving capability to over 100,000 owners. They're very happy with the capabilities of the system and will continue to improve it every week. We've now driven over 35 million miles with Fsd Beta. That's more autonomous miles than any company we're aware of. I think probably it might be more than all other companies combined. And that mileage is growing exponentially. With regard to manufacturing and technology, about 5 or 6 years ago, we said we wanted to become the best manufacturer in the world, and that is somewhat counterintuitively to some people, what will actually be, I think, our strongest competitive advantage. We're super pro manufacturing here at Tesla, and in general, we want to encourage other companies to be super pro manufacturing, and in general, I think it is a very important thing to do. We need to make stuff and make it efficiently, and that's manufacturing. So we've made a lot of advancements in manufacturing processes. As we now show in the shareholder deck, thanks to the large castings, we make the world's largest castings. We reduced body welding robot count by 70% per unit of capacity in Austin and Berlin. So that's call it roughly a body shop that is roughly 3 times smaller than would normally be the case. And I should say it's also lighter, cheaper, and has superior noise, vibration, and harshness. So it's good on every level. But this journey is not over. We'll bring another level of simplicity and manufacturing improvements with Cybertruck and future products that we're not quite ready to talk about now, but I think will be very exciting to unveil in the future. Our safety team also introduced a feature that tensions seatbelts if the vision system detects imminent collision, which has never been done before. So you can imagine that if you have a seatbelt that only tensions upon impact, you have very little time to tension the seatbelt. If you've got to be, the car is literally got to be crunching to trigger the seatbelt picture. But because we have vision, we can actually see that a collision is about to occur with 100% probability before it actually happens. And so we can tension the seatbelts and we can even adjust the airbag deployment because we can see, not just feel. This is a fundamental safety advantage that Teslas are now able to offer. And then this is also an over-the-air update. So if this is something that will be in place in all cars that have at least AP3 hardware. In conclusion, we exited Q2 with a stronger production rate than ever before. Our team continues to focus on Cybertruck production readiness and some future platform design. We are expecting to be still expecting to be in production with the Cybertruck in the middle of next year, and we're very excited about that product. I think it might actually be our best product ever. Let's see, and Fsd Beta is on track to be released for all of North American customers before the end of this year. And hopefully, if we get regulatory approval, we'll also be releasing it hopefully in Europe and some other parts of the world. We're hosting our AI Day in a few months. I think people will be amazed at what we're able to show off in AI Day. So basically, there's a tremendous amount to look forward to in the second half of this year. And I want to thank all of our employees and suppliers for their super hard work during these challenging times. Super appreciate it. Thank you.
Thank you very much. And Zach has some opening remarks as well.
Yeah, thanks, Martin. I want to start by congratulating the Tesla team on excellent execution during the second quarter. Although our production volume reduced sequentially due to COVID-related shutdowns in Shanghai, we made substantial progress in nearly every area of the business, and in particular, our global vehicle production rate as we exited the quarter. The Fremont factory, supported by our Reno team, reached new production records. The Shanghai factory resumed full production, and our new factories in Austin and Berlin are progressing well through their initial ramps. Additionally, our energy business achieved record gross profit with the highest solar volumes in many years. I want to personally thank the entire Tesla team, as I know many of you are listening. You've embodied a remarkable and relentless pursuit of excellence in support of our mission. I also want to thank our suppliers for their support during another complicated quarter. On GAAP automotive gross margin, it declined sequentially to 27.9%. Temporary decline in Shanghai production volume meaningfully impacted margin, including idle capacity and factory restart costs, and also had implications on the mix of regional deliveries. Additionally, as discussed on previous calls, we are working through the ramp inefficiencies of our new factories, which are progressing well, but have had an impact on margin as those factories come online. While we continue to see a benefit from higher pricing flowing through, which experienced some foreign exchange related headwinds, our cost structure continues to experience cost increases from inflation, commodities, and logistics. The energy business progressed well in Q2, aided by alternate solar supply coming online and progress on unit economics. Our storage business remains component constrained on both Powerwall and Megapack, which we hope will alleviate to some extent in the second half of the year. We are greatly appreciative of the patience and flexibility shown by our customers while we work through these challenges. Within operating expenses, Austin and Berlin related startup costs have wound down as these factories have moved into production and their costs are now reflected in automotive COGS. Additionally, we converted a majority of our Bitcoin holdings to fiat for a realized gain, offset by impairment charges on the remainder of our holdings, netting a $106 million cost to the P&L included within restructuring and other. We also incurred restructuring charges related to targeted staffing reductions.
Yeah, actually, it should be mentioned that the reason we sold a bunch of our Bitcoin holdings was that we were uncertain as to when the COVID lockdowns in China would alleviate. So it was important for us to maximize our cash position given the uncertainty of the COVID lockdowns in China. We are certainly open to increasing our Bitcoin holdings in future. So this should not be taken as some verdict on Bitcoin. It's just that we were concerned about overall liquidity for the company given COVID shutdowns in China. And we have not sold any of our Dogecoin.
We still have it.
We still have our Dogecoin.
Despite these challenges, we were still able to achieve one of our strongest operating margins of 14.6%. Our free cash flows were impacted by working capital related to the Shanghai factory shutdown. However, we expect this will show as a benefit in Q3 as our working capital related cash flows restabilize. As we look ahead, and as Elon mentioned, we are positioned for a record-breaking second half of the year. We're quite excited about this. A couple things to keep in mind as we progress. Austin and Berlin ramp inefficiencies will continue to weigh on our margins for the balance of the year. However, the impact should reduce as we increase ramp. Second, as we've mentioned before, we expect to continue to see recognized global pricing to increase as our backlog flows through. However, macroeconomic related cost increases will also continue to be part of our story. And finally, despite losing more builds in Q3 than expected, we're still pushing to reach 50% growth this year. This target has become more difficult, but it remains possible with strong execution. And as Elon mentioned, no more force majeure events for the balance of the year.
A lot of force majeure in the last several years. That's for sure.
Thank you.
Thank you very much. And now let's go to the questions from investors. And the first question is, Chinese EV manufacturers seem to be doing a better job than their Western competitors, excluding Tesla, at innovating in software and design. How can Tesla make sure the company is staying ahead of those manufacturers, both within China and outside of China?
Well, right now the best Chinese EV manufacturer is Tesla China. We're actually doing the best thanks to our incredible team in China. But I have a lot of respect for the Chinese manufacturers and EV manufacturers in particular. I think they will be a force to be reckoned with worldwide. They're smart and they're hardworking, and I think anyone who is not, any company that's not competitive as them will obviously suffer a market share decline. So I would say we have a lot of respect for the car companies in China and then their capabilities. Yeah.
Thank you. And the next question is, when will Tesla have a unified vector space for both static and moving object network? Will this be a V11 or later version? If the latter, can you explain what makes it a difficult problem in layman terms?
Okay. This answer will be understood by 0.001% of the audience, I think. Most people don't know what a unified vector space would actually mean. It essentially would be if you can take, if instead of knitting together static and dynamic objects in C++, if they can be knit together at the neural net level, then you don't need to reconcile them within C++ heuristics. That is an architecturally better way to. That's the most desirable outcome. I think it's probably not necessary to achieve full self-driving, but it would be a slight improvement in the efficiency of the self-driving, and it's certainly something we want to get to. The sort of nirvana situation is you have surround video auto labeling of all static and dynamic objects, and you have then surround video inference with with spatial memory as well. And that's, I think we're almost certainly there before the end of the year. Yeah, not sure how many people would understand that, but that's good. I should say also we are also confident of improving the frame rate as we delete some of the legacy neural nets. We think we might be able to get to the frame rate of 8 OLED cameras, maybe up to 36 FPS, which is actually a lot of frames considering it's 8 cameras. But certainly comfortably above 24 frames, which is basically the movie frame rate of movies.
Thank you. The next question is, Elon recently tweeted about lowering prices once inflation cools down. Can you elaborate on what do you mean by cooling down and how aggressively the company will lower prices? More broadly, how do you think about the auto pricing long term?
Yeah, so since we have, there's a quite a long wait when somebody orders a car. In some cases, like six months. In some cases, it could be up to a year. We have to anticipate what the probable inflation rate is over that period of time. So that's what we're trying to do. When we see, when or if we see indications that the inflation rate is declining, then we would not need to increase our car prices. It's possible that there could be a slight decrease in car prices, but this is fundamentally dependent on macroeconomic inflation. It's not something we control. If I were to guess, and I wouldn't take this with a grain of salt, I think inflation will decline towards the end of this year. We're certainly seeing prices of commodities trending lower. But take it with a grain of salt. This is making economic prognostication is fraught with error. I don't know if you guys want to, do you want to say anything about?
Yeah, we're certainly seeing, it's kind of a whole spectrum. On the battery metal side, for example, the price of lithium has really shot up. It used to be $11 a kilogram to more than $80 a kilogram. But, it's not every situation is that bad. So it's kind of a spectrum.
Like carbon steel, aluminum,
carbon steel and aluminum has started trending down. We will see the benefits of it only probably later part of this year or early next year.
Yeah, but I think that's just like for most commodities, we're seeing a downward trend towards the end of this year or next year. Some commodities, the processing of lithium is insane. I'd like to once again urge entrepreneurs to enter the lithium refining business. The mining is relatively easy. The refining is much harder. So the lithium is actually a very common. There's like lithium pretty much everywhere, but you have to refine the lithium into battery grade lithium carbonate and lithium hydroxide, which has the extremely high purity. So it is basically like minting money right now. There's like software margins in lithium processing right now. So I would really like to encourage once again entrepreneurs to enter the lithium refining business. You can't lose. We're licensed to print money.
Thank you. The next question is, you made the right economic call before most on inflation when you diversified into Bitcoin. It has since shown it's not much of a hedge in the real world test in the last few months. How do you think about it as an asset over long term, and what do you need to see to change your view?
Well, Tesla's goal is to accelerate the advent of sustainable energy. We're not really cryptocurrency is a sideshow to the sideshow. So we're not cryptocurrency is not something we think about a lot. We think a lot about scaling production and accelerating the advent of sustainable energy, which the record heat waves around Earth serve to emphasize the urgency of that transition. So that is what we're trying to do, is make some electric vehicles and solar and stationary storage battery packs, the three pillars of a sustainable energy future, which is like solar and wind for energy generation, stationary battery packs for storage of the solar and wind energy because of its intermittency, and then electric vehicles, the third pillar. And if those three things are solved, we have a sustainable future for civilization. And the fundamental good of Tesla, and the reason we're doing this, my primary motivation here is to have the day of sustainable energy come sooner. That's our goal. We're neither here nor there on cryptocurrency.
Thank you. The next question on 4680. Elon noted that 4680 plus structural pack is not yet optimized. Can you please share the general path of 4680 and structural packs in terms of cost efficiencies and compared to the traditional 2170 pack? Will cost improvements be mostly due to scale, or do we need to solve some technical issues?
Yeah,
you want to do the architecture?
So structural pack, where we get dual use of the battery of the cells as structure and as energy storage, in the same way that an aircraft gets dual use of the wing as a fuel tank and as a wing, is, I think, unequivocally, from a physics standpoint, the superior architecture. It's the A architecture. Now, because it is new, we'll start off getting, aspirationally a C within an A architecture. But the potential is there for it to get radically better and then unequivocally better than a battery pack, which is carried like a sack of potatoes.
And we've gained the perspective through putting our first structural pack in production that it is actually the A architecture. Yeah, like before we did that, it was a hypothesis that was backed with a lot of modeling and first principles analysis, but now we've actually built it and are more confident in that assertion.
So exactly. So the structural pack, even the C in the A architecture, is beating the non-structural pack. And so over time, it will, with further refinement, be substantially superior to a car that is carrying a battery pack as though it is cargo. And this, like I said, it's very, very much very analogous to the early days of aviation, where fuel tanks were initially carried like cargo until they realized that actually you should get dual use of the fuel tank as a wing and as a fuel tank. And that makes the planes lighter and better. And the same is true of electric vehicles.
And on cost improvements, are they due to scale or about solving technical issues?
Both.
Yeah, it's always both.
Yeah, I mean, but really, the two things that improve cost are economies of scale and core technology.
So I think technical issues may not be right.
Technical issues like technology.
Like getting to the optimal design, right? Like you always start with some excess. Some people might call it fat, but that's not really what you think it is initially. It's that you don't know how lean you can get it until you've done it a couple times.
Yeah, I mean, there's some platonic ideal of the perfect product where the atoms, you have exactly the right atoms in there in exactly the right position, and you asymptotically approach this platonic ideal. And but it takes a lot of effort over time to figure out actually what is the platonic ideal, and then to actually gradually approach that.
Yeah, I mean, you might need to create a new alloy, then you need to figure out how to cast it, then you need to ramp the casting machine with a new alloy.
We did.
We've done it for rotors, we've done it for the casting, so but those take time.
Constant improvement is something we're used to here, and it's something like we've done with our vehicles and our designs since the beginning. I mean, even we were talking a couple of weeks ago, like the first version of the front casting that we made that went into the early vehicles is like
Model S days.
No, I'm talking about like our first Model S.
Oh yeah.
Since we've ordered more dies because we need more dies for more production, we've saved like 4 or 5 kilos of mass just in die iteration, and that's something we do at Tesla like quite regularly. we'll continue to do. So like, we're not happy with a C. Like maybe we're at a C plus now because but like we got to keep going.
I'd take a B minus on the rear casting. But there's still tremendous room for improvement with the casting. So the casting is already way better than the rear body casting is already way better than the way it was done in the past, where you've got 120 different parts that are welded together or bonded together. Alloys, and then you have to put sealant in between all the various parts for water ingress and noise. So we're already way better than that with current casting, but there's still a lot of opportunities to reduce the mass of the casting and also extend the casting to include more parts, as well as adapt the rest of the vehicle for the fact that there's a casting.
Yeah, I was going to say the same thing, right? Like, we're not just evaluating the pack in isolation either. Right? It's the pack plus the body, the integration. Do we have mass in the right places? Do we have the cost in the right places, and only just the right amount? And I think we've gone through one iteration. We're doing another one with Cybertruck. I mean, we're taking the learnings and doing the next version. Hopefully, is a B plus. Yeah, in the A architecture. It's target.
The next question is, how do you feel the progress of FSD is going, and does Andrej Karpathy's leaving have any significant impact on timelines or potential progress?
Well, since Andrej was writing all the code by himself, naturally things would come to a grinding halt. Insert irony. Andrej's awesome, and we have tremendous amount of respect for Andrej. He's decided to. I think he wants to contribute more to core AI at an academic level, and get back to coding individually. So, but we've got a team of 120 people in our software AI group that are extremely talented, and I think we will have. I'm highly confident we will solve full self-driving, and it still seems to be this year. I know people are like, always says that, but it does seem to be it does seem as though we're converging on solving full self-driving this year.
Thank you. The next question is, how is the 4680 ramp going, and is Giga Texas producing cells yet?
Yeah, so we are making progress on 4680, but right now, as Elon mentioned, we are leveraging supplier cells, which we have in sufficient quantity to ramp Texas and Berlin. We expect to ramp total 4680 production to exceed 1K per week by the end of the year, hopefully before. In Q2 at Cato, we fully automated powder conveyance for the dry anode electrode tool there, unlocking major increases in production and improvements in yields. Since March, because of that, Cato output has grown 35% month over month, each month since, and yields throughout the factory are already at targets in most areas and trending in that direction in a few others. We did feed learnings from Fremont cell and pack lines to Texas and Berlin. They aren't a carbon copy. Cell design was revved to unlock higher performance and manufacturing simplicity. Manufacturing lines were further integrated, and we insourced additional content. For these reasons, there are some new ramp challenges to overcome in Texas and Berlin. Specific to Texas last quarter, cell equipment was fully installed and commissioned, and we produced our first commissioning car sets of cells through the end of the line. Our target for Texas is to begin production this quarter and aim for Texas to be capable of exceeding Cato weekly output for the end of this year.
Thank you very much. The next question is on 4680 as well, but I think Drew has covered everything that was in the next question. So the following question is, with regards to the ramp of production in Austin and Berlin, how is the situation with regards to supply of semiconductors, battery cells, and other components? How about cost inflation impacting profitability of these other plants?
I can say that. So
Tesla procures about 1,600 unique pieces of silicon from 43 semiconductor companies. So with a portfolio of that size, there are always challenges. Things are more stable on the latest generation chips. We still see some tightness in the older generation semiconductors, especially in the analog and mixed signal space. But we have line of sight to solve for the volumes being contemplated for both Austin and Berlin. And on the cell front, like Elon mentioned, we have a comfortable margin thanks to record output from our partners and have line of sight that matches the planned output from both factories. We've grown cell production significantly on a 12-month rolling basis and have long-term contracts with all our partners for key battery metals. So we don't see any major problems for the components, of course, barring unforeseen COVID-related shutdowns.
Just to add on the profitability part of the question, Q2 was our largest increase yet over the last handful of quarters on inflation and commodity-related increases for our cars. It's fairly evenly spread across the factories, given common suppliers or common issues that impact the broad supply chain. So, I think I had mentioned before that we had been seeing increases over the course of last year. It ticked up in Q1, and then it ticked up again. And the rate of increase was more in Q2. So, as we look through to the end of the year, what we're seeing is we don't think the inflation-related increases in Q3 will be as big as Q2. But as Elon had mentioned, there's uncertainty on pricing here. And we don't have full exposure, as Karan had just mentioned, on every component of cost, because we do have some contracts in place, but there are some spot buys as well, and some contracts being renegotiated. So, we're managing it with pricing and in partnership with our suppliers, but it does continue to be something that is impacting our financials.
Thank you very much. And the last question is, when will the Cybertruck be officially available?
We're hoping to start delivering them in the middle of next year.
Thank you very much. And now let's go to analyst questions. The first question comes from Pierre Ferragu from New Street Research. Pierre, feel free to unmute yourself.
Hi guys, thanks a lot for taking my question. I'd like to ask a question on 4680 and the structural battery pack. And I'd love to understand where you stand on the technology and efficiency and energy density roadmap that you described at the battery day. So what I'm trying to understand is, where do you stand on the architecture of the battery cell itself? How much silicon do you have in it? How much energy improvement have you achieved already so far? The reason I'm asking, sorry?
Go ahead.
And the reason why I'm asking that is because you have very smart guys on Twitter who shared experience about trying to fully empty a Model Y from Texas, from Austin, and noticing behaviors and recharging behaviors that suggested that maybe these cars had very, very high mileage, very high range, and were artificially limited in range in software. So I'm just kind of trying to understand how much of an edge you're building at the moment with the 4680 and the structural battery pack on range.
Yeah, let me try to provide a super straightforward answer. As Elon mentioned before, our priority was really on simplicity and scale during the initial 4680 and structural battery range. So we weren't putting all the bells and whistles in from day one, because if so, we would be sort of suffering under a string of series miracles that we would need to achieve to get going. But as we attain the manufacturing goals that we've stated, hit the ramp that we need to hit next year, we are certainly planning to layer in new material technologies and higher range structural packs. We're not holding back goodies for some rainy day or something like that.
Yeah, maybe another way of putting it is that our focus right now is on basically dozens of little issues that inhibit the production ramp of the 4680. Some of the more challenging ones have been, feeding the anode and cathode material, because we were using this revolutionary dry electrode process. But when something's revolutionary, it's a lot of unknowns that have to be resolved. So we're confident of resolving those unknowns, but it's very, very difficult. We're making rapid progress on that front. So the first order of business is really get the basics right, get to high volume and high reliability, and then very rapidly iterate within that to enhance the energy density and reduce the cost of the cell. Totally great. Yeah.
Okay, thanks.
I'd say we are highly confident of a good outcome. It's the exact counterpoint of that is perhaps it is of some debate, but the outcome is not.
Yeah, and specific to the dry process, we made a major advance this past quarter, indicated that the team is really excited about, and congrats to the team for achieving that.
But I should also emphasize that it is not as though Tesla intends to displace our suppliers of battery cells. The Tesla battery cell production is in addition to what our suppliers can do, and we want our suppliers to grow their battery output as fast as they possibly can, and that goes for the entire supply chain. The fundamental rate limiter for both transitioning to sustainable energy is how fast can you grow lithium-ion battery output per year. This is the fundamental rate limiter for both transition to sustainability, because you need the batteries for two of the pillars of sustainability: the stationary storage and for vehicles.
Yeah, and I just want to stress that a lot of these, higher energy density technologies are not necessarily scalable. I mean, most of them are not scalable from what I've seen. And so focusing on them is a distraction from the mission. It really is, how do we scale as fast as possible? And, we're taking these risks that we've discussed at Battery Day, and our plan is, as we de-risk them and they are successful, we want to bring them back to our partners so that they can go faster too, because that's all on the mission, right? How do we accelerate?
People often ask me if is some breakthrough needed in battery technology for the world to transition to sustainability. The answer is no. Even if there was zero technology breakthroughs, literally zero, from where the technology is right now, we could fully transition Earth to sustainable energy. The issue is very much the rate at which the entire supply chain, from mining to refining to cell production, how fast can that grow? It's growing fast, but the faster it grows, the faster we transition to a sustainable energy economy.
This is actually a great, exactly where my follow-up is. So, you always mention, this 50% per annum sustainable growth target that you guys have. And so my question here is, when we see the difficulty regarding commodities, raw materials, swinging prices, I'm kind of wondering, as you are planning for this 50% per annum growth, if we stand today over the next 5 to 10 years, how much of that do you feel you've secured through your work at entering into long-term contracts and things like that? And you were calling for entrepreneurs to go into the lithium business. And so does that mean you don't have enough lithium secure to grow 50% per annum over multiple years? And what's how much of that is secured today, and how fast can you improve that, basically?
Well, I think it's very difficult to predict anything 10 years from now. I hope civilization is still around, frankly. I would count that as a win.
It's not that fun.
Yeah, exactly. Every day. Hopefully we haven't had World War III by then.
Or the Earth isn't burned up.
Yeah. So, we do see constraints in refining of the materials necessary for lithium-ion batteries. I do want to emphasize this is it is not due to a scarcity of the raw material. In the case of lithium is one of the most common elements on Earth. It's pretty much everywhere. But refining of the lithium into ultra-high purity battery-grade lithium hydroxide and lithium carbonate is quite difficult and requires a massive amount of machinery, and it's a hard thing to scale. As well, it is also difficult to create the anode and cathode. I think my guess is maybe 2/3 of batteries will be iron phosphate, or maybe iron phosphate with some manganese. And there's a ridiculous amount of iron on Earth. In fact, Earth is, a little bit of trivia. It says, what is Earth made of more than anything else? Iron. Iron is the number one ingredient of Earth, IMAX. Number two is oxygen. Yeah, which is wild. But yeah, oxygen is basically rust. You stuck them together. We're a rust ball. That's almost 2/3 of Earth, I think, is rust. We are like a rusty ball bearing, with a little bit of other stuff. But plenty of lithium. So anyway, there's not like a shortage of materials.
But another thing on the LFP thing is it isn't just that there's more access to material that way. The actual refining process is less capital intensive to make a good LFP cathode. And so there's it's not just scalable on the resource side, it's scalable on the refining side.
Absolutely. To be clear, there's no fundamental barrier here. It's simply a rate question. Like, at what rate can you scale production?
Yeah.
And I think we're seeing a very rapid increase in battery production, and in the whole supply chain. If you were to say today, what are concerns? Years down the road, I would say one of the concerns is the machinery to refine the critical ingredients of lithium-ion cells. So the lithium itself, and then the cathode, which is, like I said, will be mostly iron phosphate, perhaps with some manganese. I think almost all stationary storage will be iron phosphate, and you really just need nickel chemistry for long-range vehicles and like aircraft and that kind of thing.
Yeah. The other thing I would say is, we're working with our suppliers to ramp their capability as quickly as possible. And it's not like we have a problem in the next year or two, to specifically to your question. But when we look 10 years out, we need to do more to accelerate the growth. And that is why we are making our own investments. Like, we are building a cathode facility here in Texas. The scale is going up. You can see it in the flyovers. We're working on lithium refining activity as well ourselves, because, the best way to learn how to accelerate something is to do it yourself. So these are the things we're doing to move it all forward.
Yeah, if our suppliers don't solve these problems, then we will.
Yeah.
Thank you. The next question comes from Emmanuel Rosner from Deutsche Bank. Emmanuel, go ahead and unmute yourself.
Yeah, thank you so much. I have a question on your vehicle demand and then a quick follow-up on supply. First, on the demand side, are you seeing any sort of pressure in the order book or the pace of new order, or any sort of like slowdown as a result of the pressures that the consumer is experiencing? Are you worried about it in light of your view of the risk to the economy that I think you expressed, Elon?
Well, right now our problem is very much production. So we have long leads on, as anyone can tell if they order our car. If you order Model Y, it will arrive sometime next year. So this is clearly not an issue for many months for us. Our problem is overwhelmingly that of production. So
Okay.
Maybe just two things to add. Specifically on your question, are we seeing a macroeconomic impact on our demand? Not that I can tell. Maybe a little, but
some maybe, but it's
not material. The second thing, to Elon's point about backlogs, we have a very long runway with very long lead times here. I mean, certainly the world is uncertain, and we'll have to see where things go with commodity prices, how quickly we're ramping production, what the state of the world looks like at some point next year. But the demand is not something we spend really any time talking about.
Yeah, and I think it's maybe just once again worth mentioning that there is a difference between value for money and fundamental affordability. Because sometimes people say, well, if you got all this demand, why don't you just raise the price to some, double the price or something? And but this is usually expressed by somebody who's rich. But there's even if you rail value for money to infinity, if consumers do not have enough money to buy it, even a product where the desirability is railed to infinity, they simply cannot buy it. So this is why you cannot just raise prices to some arbitrarily high level, because you pass the affordability boundary and then the plan falls off a cliff. So I do feel like we've raised our prices. We've raised our prices quite a few times. They're frankly at embarrassing levels. But we've also had a lot of supply chain and production shocks, and we've got crazy inflation. So, I'm hopeful. This is not a promise or anything, but I'm hopeful that at some point we can reduce the prices a little bit.
Thank you. And then you will be able to follow up.
Yeah, my follow-up was actually on the supply side. So it was very encouraging to see that you're quantifying your current installed capacity at basically already in excess of 1.9 million units installed currently. How quickly do you think that you can fill that capacity?
I mean, I think we've got a good chance of exiting this year at 40,000 vehicles a week.
Yeah, I mean, our internal plans are to have the capacity utilized by the end of the year. It takes time to ramp there. It'll be a challenge. There's a lot that needs to happen to get there. But that's what we're working on.
Yeah, we've had many 30,000 car weeks already. So I think a 40,000 car week is within reach by the end of this year.
Shanghai and Fremont, as we said last month, were record production, and they're really firing. They're doing really well. Yeah. But then Austin and Berlin are coming on strong. Theoretically, they also had record quarters last quarter. And if we ramp them to the capacity shown in the deck, by the end of this year, we'll be at that rate.
Yeah. But there's always a lot of uncertainty, and the production ramp looks like an S curve. And that intermediate part of the S curve it's very difficult to predict that with high certainty. But the end part of the S curve, you can say, I think you can have a lot more certainty, and so that's why I'm confident we'll get to 5,000 cars a week at in Austin and Berlin. This year or early next year, and probably, but not certainly, 10,000 cars a week at both locations by the end of next year.
Thank you. The next question comes from Colin Rush from Oppenheimer. Colin, go ahead, please.
Thanks so much, guys. Could you talk a little bit about the pricing strategy around FSD and as you get closer to this full functionality rolling out and the increased cycle times, how you see that evolving through the balance of this year and into 2023?
Yeah, we will. We will increase the price of FSD sometime later this year. I think Probably just before we go to white beta. The white beta is anyone who wants to use the beta software with all the caveats associated with that can use it. Then it would make sense to increase the price of FSD. The value of FSD is, I think, extremely high and not well understood by most people. It is basically currently ridiculously cheap, assuming FSD materializes, which it will.
Great. And then I'm sorry to belabor a little bit on this battery material side, but in terms of some of the suppliers and the contaminants, can you be a little bit more specific around some of the elements that you guys see in some of your supply chain that can prove troublesome on yields for the 4680s, particularly around lithium and potential contaminants in either the hydroxide or the carbonates that you guys end up seeing real issues with as you move into production?
Yeah, I don't really think we have anything to comment on. Yeah, the purity specs of lithium on this call right now.
Yeah, contaminants for the 4680 are not a factor. This is not an issue.
Okay, thank you very much. The next question comes from Tony Sacconaghi from Bernstein. Tony, go ahead, please.
Yes, thank you for taking my question. I have two as well. In response to the question around demand, I think, Zach, you said maybe a little, and Elon, you said maybe some indication that you might see some pressure on demand. And I'm wondering if that is really just speculation or whether there's any empirical data that you saw in the last month, whether it be cancellations or order lead times, that led you to make that comment. I think anecdotally, if you squint, the lead times have gotten a little lower over the last 4 months in both China and the US. That's really the only visibility investors have. So I'm wondering if you could maybe elaborate on whether that's really just your, sort of anticipating there could be some impact because of high prices, or whether there is something anecdotally or quantitatively that you could point to, please.
I think we've said this now for many years, and it is proven true. Tesla does not have a demand problem; we have a production problem, and we've pretty much almost always had it. With very rare exception, it's always been a production problem. I think that will remain the case.
So there's a denominator and a numerator, and
If you increase production,
yeah.
Yeah, absolutely. As we increase production, more demand is needed. Absolutely.
Well, it's more just you can't look at the backlog and state much about demand because we're doing a lot on the other side to change the production. But
we're trying to make the backlog lower, not longer.
Building factories and building more companies.
We don't want a long backlog. That's annoying. It'd be like go to a restaurant and you order a burger and you have to wait 3 hours. I'm like, that's annoying. You want to get your burger right away. Same with the car. So we want the lead times to reduce.
Okay, thank you. No, I was just trying to follow up on the fact that you both said that maybe you were seeing demand be impacted a little bit, and that was the spirit of the question. Maybe
I'd say we don't have because we see daily orders from around the world for our cars. It's actually it is like a mood barometer of people's confidence in the economy. But one can't read too much into it because things can vary a great deal from one day to the next. Consumer sentiment is all over the map. So it's manic. I was manic depressive, frankly. But we have so much excess demand that it's really just not an issue for us. It might be an issue for some other companies, but it is not an issue for us.
Okay, thank you. Elon, I'm just wondering a question for you. Tesla's obviously changed dramatically in the last 3 years from, near life or death to a company with consistent cash flow and industry-leading margins. I'm wondering if you can comment on your personal role in the company and whether you see that changing in terms of your role or your commitment and time spent at the company over the next 3 or 4 years. I think you said a few calls ago you wouldn't be on calls and unless there's something unusual, and you've been on every call since then. I'm wondering how
There's
you
been a lot of unusual things. Let's face it.
So I'm just wondering about that.
Basically, if there's only good news, I won't be on the call. but if you have like a tough situation like COVID shutdowns in China, then I think I'll be on the call. If relatively speaking, there's bad news, and if all we have is good news, then I won't be on the call. But I'm committed to the long term. I mean, I'll work at Tesla as long as I can usefully advance the cause of sustainability and autonomy.
Fantastic. Thank you very much. The next question comes from William Stein. Please go ahead and unmute yourself.
Great. Thank you very much for taking my question. Ron, in the past, you've given some assessment as to the likelihood that you can achieve success in some of the more interesting AI-oriented efforts, not only FSD, but also Dojo and Optimus. Perhaps you can give an updated view on those.
I don't want to steal thunder from AI Day. So I think we'll have some exciting news on AI Day that I think will be further ahead than probably most people think. But I don't want to. I'd love to answer you, but I think we'll leave that excitement for AI Day.
Okay, and perhaps a follow-up if I can. We've heard a lot from others, and certainly to some degree from you all, about the shortages in semiconductors in particular. We have seen some, big important customers of that type of product decide to sort of, leverage the ecosystems that exist to make some of their own in those categories. I'm wondering to what degree you're doing that. It's outside of Dojo in terms of the, I guess on the inference side, you're certainly doing that in the car. But what about sort of the more mundane areas like microcontrollers and the like? Is there any internal effort to improve supply chain and maybe improve other performance aspects?
Well, there's a lot we've done. We've been working with our suppliers. Like we don't currently intend to make chips ourselves. We don't think there will be a need to make chips, but we have been working closely with a number of suppliers. I actually just met with one of our key supplier CEOs right before this call. We had a great meeting. They're going to make major investments in some of the critical chips and components that we need in the car. And I'd actually like to take a moment to thank our key suppliers once again for supporting us through difficult times, and they really went above and beyond to support us. So to all our suppliers out there, thanks very much.
Yeah, and I guess just maybe we don't talk about it very often, but we do have a lot of custom silicon in the vehicle already. Microcontrollers, yes, some. Battery management, yes, some. Power electronics, yes, some. So we try to go after where there's actually a technical advantage. And in the future, I think we're going to look at where there's a supplier advantage, even supply chain advantage.
Even now, where there's supply chain issues with our tier ones and tier twos, Karn and Roshan get into it with us on the engineering side, and we find solutions, whether it's alternative chips or changing the entire structure of the stack to make it work. And I think that's an advantage we have that many other OEs just simply cannot.
Yeah, I think Tesla is as much a software company as it is a hardware company, and so one of the ways that we've been able to address supply chain issues on the chip front is by rewriting our software to be able to use different chips, or in some cases achieve dual use of a single chip, which is even better. And actually, quite frankly, the chip shortage served as a forcing function for us to reduce the number of chips in the car.
Simplify.
Yeah, it turns out we had more chips than we needed. So, but it's a testament to our software team that we're able to roll a new chip into the car and write a whole new batch of software for that chip, and without interrupting production.
Yeah, and our goal is as we mature and scale the platforms to, integrate more functionality into fewer chips. Like that is the way that it's gone with laptops and phones. It's going that way in cars, and we're trying to do that wherever it makes sense to do it. Yeah, as quickly as we can.
From a supply chain standpoint, what do you think about the chips and whatnot?
Yeah, from a high level, instead of designing and building our own microcontrollers, we're partnering with key partners that understand the architectural requirements, and they'll take the specs and design something for us. We've done that, to your point, Drew, in the battery sensing space. We've got some application-specific ICs. But yeah, integrating, reducing the number of components, makes the supply chain easier, but it also makes the reliability of the end product better because there's less failure points. So that's always been the mantra.
At times, we also go at the wafer level and try to consume less to achieve the same functionality. So that's something also that we've been looking at in some of the constrained modules that we've faced in the last 6 months.
That's good.
Fantastic. Well, thank you very much. I appreciate all of your questions. Unfortunately, this is all the time we have this quarter, and we will speak to you again in 3 months' time. Thank you very much, and goodbye.
I love how abruptly they come to an end. All right, questions over. Peace out. All right, well, that was pretty good. I took a whole bunch of notes. I'm going to do a whole recap video on this as well. What was your guys' greatest takeaways from this? For me, I know I'm excited about the second half. I was anticipating, knowing this year, still with all the macro headwinds that we've got facing, all the first half headwinds that we're facing between Shanghai and all the slow ramps, and just focusing on production, I figured next year was going to be the year that we were really going to start seeing some new stuff and get that excitement back. But we might actually start seeing that in the second half this year. Yeah, that was a big one too. The fact that he said they were going to solve it this year, and I like how he answered the question about Andre. And with Andre not being there, I love how he said it too. He's like, yeah, Andre was the only one writing everything in all the software. So that was awesome. So it's good to see. They reiterated that, and they've said it many times that a lot of people give Elon and Andre credit for everything, but in reality, it was it's the team. It's the team that's doing it. It's not the two of them doing all the work. So it's good to see that this team is going to flow forward without Andre. And it definitely, judging by what Elon had said, it was not a bad breaking of ways. So it was great to see for them to go, and he sees Andre is going on to do more things. And when he was talking about getting down to the fundamentals of AI for Andre, so I wonder if they're kind of past that part for Tesla. I don't know. But again, when he also said that, they're further ahead than people think when it comes to AI Day 2, I'm now really looking forward to AI Day 2 to see what they got coming out. Yeah, inflation should be lower. Obviously, naturally, it should be coming down. Should be trending in that direction. That's the way we're obviously shooting for. That's the way the Fed is trying to bring us. So whether that's actually going to happen or not, we'll find out. But yeah, that I know is the goal, is to get inflation down by the end of the year. It even seems like Bullard is talking about inflation coming down to 2% in the next 18 months, and that's huge. And if we can actually get to the point where inflation is down to 2% in 18 months, that bodes really, really well for 2024 when robotaxis come out, when a lot of people are questioning demand and saying Tesla needs a lower priced vehicle. then Tesla can drop down the prices of the 3 and the Y. They can come out with a compact car for even less. So a lot of good timing, I think, coming up for Tesla over the next 2 years. Yeah, 40,000 cars per week. I'm glad they dove into some of the numbers. I think that's going to be good. And I know somebody had asked earlier about what we're going to do tomorrow for a stock price. And I think some of these key pieces were big for it. So, seeing that, they're looking at a run rate of 2 million vehicles per year at the end of this year. And that's only with Austin and Berlin putting out 5,000 per week each. And both of those are going to be ramping up to significantly more by the end of the following year. Thinking about how Shanghai now is pushing up to 22,000 per week. If we get Austin and Berlin next year, by the end of next year, pushing up to, 10 to 15,000 per week, that's a significant jump. That is extreme scaling. And that there doesn't even include any new factories that they could be in the works on, any expansions to the current factories they have. So I think those were the numbers I was looking for in this earnings call to let us know and give us that indication as to what the stock price might do tomorrow. Again, for those of us who are long-term investors, tomorrow's price doesn't really matter, but it's fun to watch. And again, this is the fundamental stuff we want to watch to see. Yes, that was a big one for me, obviously, because I've got one on order, and the sooner they can start delivering them, the sooner I'll get mine, because I'm probably getting mine in like 2025 or 2026 at this point. But the fact that he said deliveries will start in next year. Originally, it was production will be starting at the middle of next summer or the middle of next year. So to have delivery starting at that point, and I know it's like, production will start and then they'll have deliveries come shortly thereafter. But that was great to hear that it was deliveries actually coming out. You know what? So I was actually talking to somebody the other day about the ICE vehicles and the fact that, when you get down to the parts and stuff, and dealerships are going to go away, you got to remember that ICE vehicles are still going to be sold in many places, at least through 2035. Yes, we're transitioning over, but there's still going to be ICE vehicles out there, probably hitting price parity. For the average price parity is going to hit probably in the next 3 years, but they're still going to have low-end vehicles. People are going to want to go out there and buy, pre-owned vehicles for, under $5,000, and EVs won't get there until probably the end of the decade. So we're still going to have all of the ICE vehicles that are out there. All of those ICE vehicles are still going to last 5, 10, maybe 15 years. People are still going to need parts on them. So that transition will happen. We'll probably come up with, as we're transitioning over, I have no doubt they'll come up with new ways of recycling them, recycling the metal, maybe being able to use them for EVs as well. Legacy Auto might actually figure out a way to do that themselves. That would be wise of them. Whether they actually do it or not, I don't know. But to be able to reuse a lot of the materials and break them all down, use them in the future would be beneficial. Obviously good for everybody as well, instead of just having them sit in junkyards and leaking everywhere. So I think, that transition is going to happen. It's going to be a rough road. There's going to be a lot of learning along the way. There may be new companies that come out of it, new companies that are going to take in ICE vehicles and recycle them as well. So maybe that's going to be a company to look into the future to invest in. Yeah, and and the fact that they reiterated the 50%, which we kind of figured they would, but they did kind of give that caveat of as long as no major issues happen, because right now they're basically having to run balls to the wall to make it happen. Again, we talked about it earlier. They've got to produce and deliver 839,000 vehicles in the second half of this year just to hit that 50% year-over-year growth, and that's just 100,000 less than they did all of last year. So that's going to be a pretty good chunk along the way. So we'll see how it goes, but again, progress for me is the more important part. If they come up with 48% year-over-year growth, I'm not going to be too hurt by it, because we know what happened in Shanghai in the second quarter. So as long as they continue to grow at this rate, as long as they get to the 5,000 vehicles per week out of Berlin and Austin by the end of the year, if they get to that 40,000 per week total vehicles produced by the end of the year, that's to me the more important stuff than them actually hitting that number of 50% year over year. That was a good point. I heard this, and when he said that, I'm like, I don't know if he let it slip, but there were definitely a few times along the way in this call that it seemed like they were going on with some information, then kind of stopped. And it's like, and I remember we talked about it in the first the Q1 earnings call. Is like with Elon there, it seems like they've got like lawyers sitting around the table and they're talking, and all of a sudden they get this dirty look, like your parents staring at you, like don't do that, and they have to stop and they like cut off, and all of a sudden they go into something else. So and I don't know if it was a slip thing, but the way he explained it, was if they're going to try and help other people get into lithium refining because they know it is a roadblock, the best way for them to be able to help other people is to know what the roadblocks are along the way. So again, they're probably not going to do heavy lithium refining themselves, but they're going to do some of it and in turn try to encourage and help other people do it as well. And if other companies are out there refining and they have issues, at least Tesla has the experience to help them through it. That is true. Rotary phones. Gosh, my parents had one. Man, I think it was until I went to college. So late 90s, they still had a rotary phone in the kitchen. Heck, we didn't even have a computer when I went off to college. So it wasn't until I got back from college that they had a computer. Yes, actually, I wonder if we'll see some of that. I know some people have done some, but taking a look at some of the older classic muscle cars and converting them into EVs, that'd actually be pretty cool. I bet there's going to be some underground company doing this. Yes, it kicked under the desk for sure. Yep, FSD prices going up. That was a big one that I took out of this also. For me right now, I don't currently have FSD on my Model Y coming up, but I will end up getting it on my Cybertruck. Now, as I said, I probably won't get that for 3 to 4 years. So maybe, I'm hoping seeing as they're going to be delivering them next year, they'll have the order pages up. So I'll probably be able to add it at that point. So I will definitely add it in, especially if they're going to incrementally go up on prices and I can lock in a lower price. Because I got in later, I didn't have the opportunity that a lot of other people did to lock in that super low FSD price. I'm actually really curious if they're going to hold up their end of the bargain with that for people for FSD. And I think, correct me if I'm wrong, I think the original price was $8,000 when the Cybertruck first went up for pre-orders. But I don't know. But either way, I will get it on that one. But yeah, seeing them prices going up at the end of the year, so that may encourage people to toss FSD on now if they really want it. Yeah, it'll be interesting to see. Actually, I didn't even check as my phone was being used for the call. So you guys were telling me we're up at 751, and currently we're at 748, so still up. So that was good. So we jumped up nicely with the numbers when they initially came out. We came back down, and then the earnings call, they went back up a little bit. So that could bode very well for tomorrow. And then, of course, Doge flying as soon as Elon said that. Where are we at? Yeah, we had that good jump. It's selling off a little bit. It was still a nice jump during the call. Really? So now when you're selling them on there, is it for antiquity purposes or is it for people who are using them for functionality? I would imagine it's not for functionality, but you never know. I highly doubt they're going to honor the Cybertruck pre-order prices unless they somehow manage to have the costs of all the materials come down significantly over the next 6 to 12 months. And then inflation comes down. I think that'd be the only way that we will see the pre-order prices be honored. The way I'm looking at it, and I think it may still hold true, because they're going to have a plaid, they're going to have a quad motor, they're going to have a dual motor. Don't know at this point if they're going to have a tri-motor still. We know about the dual, the quad, and the plaid. I'm guessing the plaid is going to be around 120 grand. I'm guessing the quad motor base will be about 100K, and then probably about 80,000, maybe 60 for the dual motor. That's my guesses on prices right now, which I think are relatively realistic. But I think Elon ideally would like to have them all be under 100,000. But again, obviously these costs are going to be a huge piece of it. So we'll see what plays out. Yeah, when it comes to airplanes, Elon said himself trying to do an electric airplane. I know he had mentioned it in Iron Man 2, but that is something he had then spoke about afterwards. Was that's just not realistic to do, at least not at this point. But we will see what happens. And going to oil, it's not like we're ever going to get rid of oil entirely. Oil still needs to be used for a lot of different things around the world. It's really more about getting rid of the oil dependence is the big piece. If we can get ourselves away from oil dependence, because when you go to sustainable energy, everything can be individual components. So like it's not like if all of a sudden electricity goes down in one place, it takes down the entire world. It's not that way. It flows so independently. People can have up solar fields and be functioning when other people don't have any power. The power can go out, but you still have battery backup. So it's just getting away from that oil dependence is the big piece. Yeah, that retro stuff is big, and some people, and Gen Z is, it's funny you say that because my son, he's 15, and like the music he listens to is like he loves like old stuff. He loves stuff from the 50s, 60s, 70s, 80s. It's just that generation. I don't know if it's because they're listening to, what their grandparents are listening to, and that generation, that's the boomer generation, but that generation was into all of that stuff. So the younger generations see that, they talk about it, and they're like, "Oh, that's really cool. I want to know more about that." Maybe that's all it is. Yeah, planes are definitely getting much more efficient. And we'll see, the airline industry is a tough one because it's not a very profitable business. But anything they can do to be more efficient is definitely going to be helpful. Which EV do you think will pose the next two competitors for Tesla? For China, BYD is going to be the biggest competitor, but I think at the same time, BYD is also going to be a huge contributor to Tesla's success. Because I think the more EVs grow, the better it's going to be for Tesla. And so as this goes forward for the next 3 to 5 years, any competition is good competition. So I think BYD is going to be a big one over there. And then VW worldwide, I think, will be another one. But again, both of those, well, with VW, it's a little bit different because Herbert Diess is definitely on board with what's going on. And if Herbert Diess was able to actually control what the company was doing, they would most likely be a serious competitor to Tesla. But I don't think they're going to truly be that because, the rest of the people on the board are not on board with transitioning to EVs like Herbert is. Devo, nice. I wish you get the Devo hats, and maybe on the days where the stock is red, I'll wear one of those Devo hats. Let's see. I think that's everything. We've been on for a while, almost over 2.5 hours. All right. I'm going to let you guys go. This was an awesome first earnings call. Had a couple of hiccups along the way, but thank you all for being here. This was absolutely amazing. Definitely a learning experience for me. Great earnings call. Glad to see the stock is up. So we will see how we trade tomorrow, and I will see you guys all later. Next live stream will be this Friday evening at 6:30 Eastern time. We will see you guys then. Thank you all so much. Have a great evening.